Central Bank Digital Currencies, or CBDCs, represent a new form of government-issued digital money. Think of them as the digital equivalent of the cash in your wallet, but backed and controlled by your country's central bank. A CBDC is essentially a digital version of a country's official currency. Unlike the money in your bank account, which is managed by commercial banks, a CBDC is directly issued and regulated by the central bank itself. This means it carries the full backing and guarantee of the government. Traditional money exists in two forms: physical cash like notes and coins, and digital bank deposits held in commercial banks. CBDCs differ by being fully digital tokens built on blockchain or distributed ledger technology, eliminating the need for physical currency altogether. There are two main types of CBDCs. Retail CBDCs are designed for everyday use by individuals and businesses, similar to using cash or a debit card. Wholesale CBDCs, on the other hand, are exclusively for financial institutions to settle large transactions and handle interbank transfers. CBDCs have three defining features. First, they are backed by government guarantee and central bank reserves, making them as secure as traditional currency. Second, they enable instant settlement with minimal transaction costs, unlike traditional banking, which can take days. Third, they are built on distributed ledger technology, which ensures transparency and security. CBDCs offer several important benefits. They can enhance financial inclusion by providing banking services to unbanked populations who lack access to traditional banks. They significantly reduce costs for cross-border payments, which currently involve high fees and delays. Additionally, they give central banks improved tools for implementing monetary policy more effectively. However, CBDCs also come with risks. Privacy concerns arise because governments could potentially track every transaction made by citizens. There's also the risk of disintermediation, where commercial banks lose customers and deposits to central banks. Finally, cybersecurity threats and system vulnerabilities pose serious challenges, as digital systems are targets for hackers. CBDCs and cryptocurrencies are fundamentally different. CBDCs have centralized control by the government, maintain stable value tied to the national currency, and are fully backed by the state. Cryptocurrencies operate on decentralized networks, have volatile pricing that fluctuates wildly, and have no backing entity or government support. Several countries are already developing CBDCs. China has launched the digital Yuan, or E-CNY, as a retail CBDC in active deployment across multiple cities. The European Central Bank is investigating a digital euro for the Eurozone. India's Reserve Bank has also launched pilot programs for the digital Rupee, or e-Rupee, testing both retail and wholesale versions. CBDCs represent a fundamental shift in how governments manage currency. They combine the trust and stability of fiat money with the efficiency and innovation of digital technology. As more countries explore and implement CBDCs, they could reshape the entire global financial system in the coming years.
If you like this video, hit that like button and don't forget to subscribe. Visit codelucky.com for more such useful content.